So much, sir. So now we have a business technology leader with 27 years of diverse experience spanning across industries and technologies, with last 14 years in banking in focus on improving quality, culture, innovation, and risk of process and products. He is currently the CEO of DBS Bank Asia Hub 2. So he'll be presenting us the keynote 1 on digital transformation in banking. Please invite Mr. Mohit Kapoor. Sir, the stage is all yours.
So when they say 27 years of experience makes me look like an old man, didn't want to. So thank you for inviting me. Good morning, everyone. It's a privilege and an honor to speak here. In my view, if there's any job which is getting more exciting, it's yours. Risk management in the new digital world is very different from how we've been doing it so far. I will try and talk about some bit of digital trends in the technology and the banking field, and then correlate that with risk management to see how our job needs to get better and more futuristic as well. Like she mentioned, my name is Mohit. I head the Digital Innovation Center for DBS, which is codenamed DH2. It is the only center we have outside Singapore. DBS is a very small bank, Asian, and we focus on Singapore, Hong Kong, Indonesia, Taiwan, India, and China. If you look at these 6 countries I spoke about, the one thing common amongst them is they have more phones than people, right? And they have a growing middle class and growing mass affluence and young people. So I think we as a bank have made that choice not to go to any other geography, stay with this. And I think if there's any innovation in banking or risk management or anything else, it's going to happen from this geography. So I will contain my talk today on the six countries I spoke about and how we are doing it so far. So I don't know if you can see that. Okay. So when I was a young man, he was the hero. He's retired now. But if you look at what he said quite profoundly, he says that oftentimes people are thinking of improving things over the next 2 years. Those companies are great who take a moonshot or who are thinking 10 years ahead, right? I think your job and my job similarly has to reinvent itself. If it's around improvement, 1% better interest rate for a bank, or customer sat score up by 10%, or opening account faster, it's not good enough, right? That's not good enough. You have to imagine 10 years ahead. At DBS, we do it with a process called future casting. And we cast out the future, so we would choose a year. So we will choose a year to say, let's believe we are in 2025, right? And in 2025, what are the social trends? What are the banking trends? What are the technology trends? How will that change what we do? And start back from there and then say, now, the products we build, are they ready for 2025? If not, not good enough, right? Do it again. I think our job here, from a risk management point of view, has to be the same. If not, imagine these companies were not there 10 years ago, right? And you and I may be doing the same job. I surely was doing the same job, more or less. Not for the same company, but quite similarly. Same scope. But these companies are not there. So these business models did not exist 10 years ago. So if you were to tell me that we know perfectly how to manage a risk for Airbnb, you are lying or fooling yourself, right? Because it's not the hotel you are managing the risk for. It's a completely different business model. If you were to tell me you know how to manage risk for Uber, it's not true at all, right? Because 5 years ago they were not there, or that business model is not there, which means that disruption is happening in all the fields, including banking. Look at what my guru said 22 years ago or 24 years ago. It's coming true now, right? That people don't need banks, really. They need banking. They need lending, loans, insurance, mutual funds, shares. If somebody else can give it, it's good enough. And it's happening already. We face that disruption in China with WeChat, in Indonesia with Gojek, in Singapore with Alibaba, Alipay, in India with Paytm. They're not banks, right? Gojek is a taxi company. WeChat is a chat portal. Alibaba, Alipay Alibaba is the Amazon of China. And Paytm is just a wallet. right? Why are we getting disrupted? And we are a bank, right? So in my view, disruption can come from any quarter, and if you want to make technology business models or technology for business models, they have to be 10 years ahead. And that's why I want to set this talk, saying that are you, in your risk management, looking at the threat landscape 10 years ahead? And then what do we need to do? Right? It's 10 years too far out, then 5 years ahead. But incremental improvement will not do it. Right? We at DBS, in spite of what Bill Gates said, are still around. But we are still around and very successful because we replaced the D there. It was the Development Bank of Singapore. It's almost like the Digital Bank of Singapore now. We are doing it, and that's why we are in Hyderabad. We are in Hyderabad because we have access to the best talent. We have a growing business interest in India, and there is an amazing ecosystem to work with, all the partners of choice right where we are. And that's why we are here, to reimagine banking. So oftentimes the moonshot I'm talking about, which is 10 years ahead. So while you need to also aim for the rooftops, which is 10% improvement, but the moonshot is very much in Hyderabad. So we're trying to do that on a daily basis. We are focusing on two things here as our transformation: what we build and the way we work. So the things on the right top are making the bank ready for the present and the future, and things on the bottom are the way we work. So on the what we build, very different from how a bank would focus on. We are focusing on automation. We are focusing on APIs where the bank is open, internally and externally, to connect into ecosystems where either we are a plug in an ecosystem or we plug into somebody else's ecosystem. We are either the orchestrator or just a participant in an existing ecosystem, right? So APIs are very important. You have to go to open banking. Artificial intelligence, I don't need to talk about it. I think you're already looking at that topic on an ongoing basis. It redefines everything we do and how we look at risk. And I'll talk about a bit of risk management in the new world towards the end. Data, a new puzzle for everyone in terms of the collection of data, the consent, and the ethics of using data. That's the ethical side of it. But we're focusing a lot on using data for customer experience, customer insights, and how to make great products at the right time being offered to the customers. Cloud, surely, it brings again a new angle to the risk. We'll talk about it a bit later. And focusing on open source, where there is no assurance of patch management or upgrades or updates, and how do you handle that? So that's on what we build. The way we work is the inspiration which comes from big tech companies. That are we agile enough? And here I don't mean agility, or I don't mean agile as a software principle. I mean agility in the mind. Are we learning from each other? Are we learning from non-banks? That's what we do in DBS a lot. Are we customer focused? Sometimes even customer obsessed. Are we obsessed about what does the customer want? Are we using data enough? Are we experimenting more and failing and learning from those failures? And how do we take care of that? So those are things we're doing on a daily basis to transform the bank, to be almost like a tech company. So that's our equivalent of a Google Noogle, right? So if Googlers are called Nooglers or Googlers, so we call people in DBS as Gandalf people. And the Gandalf there is the DBS, a myth copied from the tech companies. Or how do the tech companies inspire us? What about these companies that they do well, which the banks can do even better, right? In my view, if banks were to be half as good as fintechs or tech companies, then tech companies don't have a place to be a bank. Because if you see how it's happening, a lot of tech companies want to be a bank, and bank want to be like a tech company. So banking being a tech company is a better chance because it comes with a lot of load, whereas the other way around. So that's our moonshot on how to go after it. To that effect, around 2.5 years ago, in April 2016, we launched India's only mobile bank and the world's 5th mobile bank. And this is not a mobile front end for a bank. It is a mobile bank, which means that you download an app, almost Amazon-like, download an app, put your Aadhaar card and put your PAN card number, and then you start banking. It's worked very well. That's our moonshot, where we said India was ready. India was the only country ready because of Aadhaar. We took the product to Indonesia in October, and we're taking the product to Taiwan this year. So it's a very successful product, and that's how, in my view, you do moonshot. Surely, you learn a lot, all what I talked about on the way it's built based on artificial intelligence. We don't have call centers, we don't have customer servicing centers, The chatbot takes care of everything. It's completely AI enabled. It's online. It's based on data and analytics. It offers products and services to customers when they want it, not how regular banks would do around doing a carpet bombing of SMS messages, offering you deals which you don't want. Like I get SMS message to 10% off on pizza. I don't eat pizza. My son eats only pizza. He never gets SMS message, right? So because maybe I'm richer, so I can have more pizzas, but I don't eat them. And the banks don't get it. So you have to do it like tech companies do. So that's our moonshot. It's fairly successful. Still a long way to go. It comes with a lot of trust in the mind, which is a leap of faith people have to take for an app-only bank, right? Would you leave 5 lakh rupees in a Paytm wallet? Likely not, right? So would you leave 5 lakh rupees in a bank app, which is just an app? Tomorrow, what if the app doesn't work? Where is the 5 lakh rupees gone, right? Who do you go to? So it is changing, and that's what the risk manager has to think about. These models will become more and more prevalent. This is only one example I'm giving because we own this product. I'm sure there are many other on the internet already there, whether it's peer-to-peer lending or any other kind of business models getting created in the new world. But this worked well for us, taught us a lot, made us a lot more confident about what you can do and what could be a moonshot. And we're trying to repeat this in many other fields. This is only consumer bank. We're trying to do it in the commercial bank. We're trying to do it in other fields. So it's working very well. In November 2017, we launched the world's biggest API portal. If you look at the benchmarking of banks, currently DBS is the bank with the most number of external APIs, which means you could be a developer of any company and develop an API and connect into the bank's ecosystem, either on a partnership model or just for anything else to open accounts. We have around, I think it's a bit dated, we have around 80 live partners now, including large companies like McDonald's in Singapore. We're working on APIs in India and Indonesia now, connected to the DigiBank product I spoke about. And that's the way to go. Banks have realized that organically you cannot make any more profit or big profits. So if you open branches and expect people to walk in to the bank, that may or may not happen. Likely the branch will close down before you break even. So that's not the way to go. The only way to go is through a scale of technology and purely digital in an end-to-end manner. So we are doing that consistently. And API is the way to go, where it cannot just be organic sell. You have to connect with different partners, share your revenue, profit, and margins, and then grow together. So we're doing that a lot. Grab Taxi is a classic example in Singapore. Grab Taxi acquired Uber, if you're aware, in Singapore. So DBS is the bank for drivers, riders, and Grab as a company, right? So the Grab driver gets his daily money. If you know how the taxi works, I don't know if you know Uber in India, the driver has to log everything and then claim his cash into the bank end of the week. And that's a float which driver needs to have, right? So with Grab Taxi, through the API model, each driver in Singapore can get cash every day and can go to any fuel pump and get diesel or petrol, whatever the car is, into it through digital currency end-to-end, right? They don't pay. It is from the end-to-end DBS account. So it is the API and it's invisible. So that's the other thing, banks have to become invisible. So we're focusing a lot on DBS becoming invisible, where it's not about the bank, it's about your riding experience. The bank may be on the back. And that can only be done using APIs. So there are many such examples we're working on. So in my view, if you were to look at 4 things which we have to do quite well, and especially for a consumer bank, it's about selling with the context, like I said, at the right time, when you need it, not when the bank wants to give it to you, right? And that's the pizza example. There are numerous other examples that how does a bank become your lifestyle option? How does the bank become, like your life on Facebook? And I don't mean any other way, I say life at Facebook. So how does the bank become a part of your life? Lot around predictive, on can I anticipate that you've been to a Honda showroom because your location code is on the phone. So likely you're looking for a car, not going to buy a burger, right? Because Honda showroom does not sell burgers, right? But what if a bank has timed their carpet bombed SMS to send you a 10% off on McDonald's burger while you're standing in the Honda showroom? That's silly. And that happens all the time because companies have not thought through the analytics part of it and the prediction of what you need. How much do I know about you? and your needs at that moment, right? A lot about sentiment. If you lost your wallet, or if you're undergoing a troubled time, or if you're unwell. I know you've been to a hospital, again, not to buy a burger, but somebody may be unwell. That's a wrong time to sell you a deal. It's a wrong time to give you a loan. It's a wrong time to, you may need a medical loan, which I'll watch and see, but it's a wrong time surely to sell you a pizza. So how do we do sentiment analysis a lot better? These are simpler examples, surely. There's lot you can get from the Play Store, App Store, and the social comments about products and the bank. So how do you work on that? And then surely, how do you do a campaign management which is based on the customer needs, not on the bank's need to sell? And we're doing it all here in Hyderabad a lot with crowdsourcing, involving people who are part of DBS and people who are not part of DBS equally at the same time to take it to the next level. So some examples of what we've done, the one on the left top is how we hire people. We hire people through hackathons where we say anybody is welcome, please come and hack your way for 1 day or 2 days. Normally it's a non-stop event through the night, and then end of the second day you just get offered to join the company, because by then I know what you've done. You put your code in the bid bucket, we observed you on how you've done. So that's a new way to hire. You have to reinvent, and I'm giving these examples to enthuse everyone here and re-energize that what you do has to be reinvented, and quite dramatically it's different from improvement. It's breakthrough sometimes. Similarly, how do we give people tools and tackles and instruments to make things? So we call it a maker workshop, where probably we'll invite Amazon and with Alexa or similar other experiments. How do we involve our employees to reimagine banking in that context? I think the leap to go into AR, VR, XR, IoTs for a bank is still yet to be imagined. We have done some. So we have done AR, VR experiment in Hong Kong, where if you point your phone to a building, on the phone it tells you which apartments in the building are available for sale or rental. If you click that, it tells you what's the cost. If you click further, somebody from DBS will pop into that phone and give you a loan, right? That's our purpose behind it, but we're invisible. While you are on that portal, it's about you and your house. It's not about the bank. Only when you want to buy the house or want to look at funding and affordability and whether we'll give you a loan or not, only then DBS pops in, but the app is owned by us. We similarly done a car mall in Singapore, very similarly, that you could be a seller of a car and you could be a buyer of it's a used car mall, and it lets you interact. So those are examples of how banking can be reimagined with AR, VR, XR on selling insurance or loans, and there are many more such journeys yet to be taken. So we're working a lot on that in our Hyderabad center, and the maker workshop there is about making things. Similarly, doing hackathons to solve problems. I'm sure a lot of you already do it in your company, where how do you take a solution, take a problem and build a solution in 2 days flat, involving 100 people, and then take it to production after that. We do that a lot. And then surely, how do we get inspired by people who are from non-banks? We often say that we don't have much to learn from other banks. Let's see what other non-banks are doing. And non-banks could be any company, could be food, travel, hospitality, any other company, insurance, and many of them have a lot much to learn from, because the customer sentiment, the customer experience is universally important. And that's where you need to start. I think amazing companies like Apple and many of those have focused a lot on that already. So for this transformation, what does the world think about DBS, or what does the world think about the now called Digital Bank of Singapore? So we won the Euromoney Best Digital Bank in the World award 2 weeks ago in London. That guy is my boss, the British guy there. He's called David. So this is our second time winning of the same award in the last 3 years. In 2016, we were the best digital bank in the world because of the DigiBank product I spoke about, which was launched in India. So based on the India product, we got this global award. And the last 2 years is all about the journey. I talked about the API journey, where we are the biggest API portal in the banking field. We are the bank which has digitized the most front to back, and DigiBank surely has matured and gone to many other markets. So the Euromoney agency has looked at all those parameters where we've been able to transform the journey digitally of a customer across customer acquisition, customer engagement, and customer transaction. So we look at redoing the customer journey in these 3 areas, right? How do you acquire customers, which means how do I open an account? How does the customer transact? Could be payment, loan, any of that, money transfer. And how do I engage the customer, which is the contextual marketing I spoke about. All three got transformed through digital. None of that is a hybrid strategy. It's purely digital. So the agency looked at all these and gave us this award. It's kind of a revalidates our position of running the race in the right direction. We also got further recognition on many other Future of Money and other publications. Also, at least in India, we are heading in the right direction to be the LinkedIn top 15, Aon Hewitt top 10, and Economic Times top 10 places to work. So that's worked well for us to attract the talent, because like I told you, why are we here in Hyderabad? Because to attract the top talent, to work with the best companies, ecosystem partners, and also to grow the franchise, which is leverage the market opportunity. So all that is working very well to us. However, you can only do it well enough, and that's where I segue a bit into the risk side of the equation. If you manage the risk equally well, if you're looking at the new banking models, years from now, and then work back on the risk, on how we're managing the risk there. So we have used a lot of that thinking. If you look at it, very, very exciting times on risk management, and the financial services industry especially is in a very interesting time. On one end, there is a talent which does not want a full-time job. There is a talent which does not like being managed or being a part of a boring bank, right? So we're trying to hire those people, but they don't want to be a part of a boring bank. The macroeconomic conditions in the world are not stable. There's still recessionary trends in Europe and Brexit and everything else you hear about. The customer expects you to take care of security, not compromising anything, but expects everything real time, on demand, and when they need it, and on the phone, right? There's lots of emerging technologies which are not stable yet. The open source I spoke about. There's emerging competition from non-banks, so banks have to think how to continuously reimagine and also be profitable. There's a public perception that banks are evil, right? After the meltdown in 2008, there's a lot you got to do to become noble again. In my view, I've been working in banks 20 years. It's a noble profession in many ways, because we help life events to get funded. But that public perception is still there. There's regulation changing every day. There is shareholder angst, you're not giving enough money, return of equity. So it's not easy to be a bank anymore, right? To do all this, to remain profitable, to be customer focused, and to manage all regulation. Increasingly, laws are changing as well, and we don't know. I hope you guys are spending enough time between yesterday and today talking about these. What will be the impact of many of these? I've not even written the Sri Krishna committee discussion around locally hosted data. I don't know whether that's good or bad to host all the data in India. So time will tell. But lots of this is happening. Enforcement of some of these IT practices is not done fully. GDPR is a new thing altogether for Europe and the UK actually. And how would we take care of all this? So things are changing a lot, and hence our job is getting very interesting. If you think this decade for you has been challenging and interesting, wait on for the next decade on when the machines take over and how that changes our life. Similarly, there is a big moral dilemma on the ethical and the legal sides of data use. So if you look at data ethics, the consent of data collection, consent of data use, and the consent of erasing the data. How do we treat that, right? And I'm only giving bank example because I know I've worked in banks all my life, but it's true for all the companies. It doesn't matter what you do. You have data about employees, you have data about customers, you have data about other companies. How do you use it in the most ethical manner? Because you're out there to, please your customers, be profitable, be a best place for talent to come work. But what is the boundary of ethical and legal, and how do you balance the two? Very, very interesting times, right? If you look at, I'm not even talking about AI yet. If you look at AI, look at self-driving cars, right? What is less risky for a self-driving car? A drunk driver, an old driver, a good driver versus autonomy? Which would you say is more risky? Because it's all comparative. Is the autonomous car safer compared to a good driver? Is the autonomous car safer than a bad driver? who is a bad driver, how do you know, and how would you then make a risk, how do you balance the risk management so that the residual risk is lower, because inherently, the inherent risk for all businesses which are currently getting reinvented is higher, right? They are inherently higher risk in all the business models compared to 10 years ago, right? But are we mitigating the risk good enough so that residual risk is less? How do you do it? So in my view, it's similar to how Netflix talks about their, I don't know if you follow Netflix as an inspirational company, where they talk about their culture, which is about freedom and responsibility. Sometimes, Superman's mother also talks about it, that, great superpowers come with responsibility. So it's about what freedom to give to your employees to use data and to make products, and what is your responsibility as a company doing best for the world, whether it's green energy, it's customer interest, employees interest, and changing the world. So how do you balance ethics, legality, profitability, and sustain to be great business in the new world? So those are things which are changing very fast, and I hope that you are talking today. I see the topics talking today about all that, and how would you reinvent the risk management framework for that. So some more, I don't need to speak about this. This room is full of people who are working on these things. They will all change for the future, become surely more graver as we go on, more denser and more rapid and more frequent and more stronger and more difficult to detect and more difficult to address. And hence, only if you are ahead of the game, only then you can do it. I have one example from DBS, right, where we have reinvented how we audit, right, where we're saying we're doing auditing at the speed of risk, right? It's like speed of light. It's patterned on that. And this worked very well if you look at how audit teams work, third line of defense, in banks especially, with superpowers normally, and directly supported by the CEO. Classic audits would do data collection upfront a bit, and then spend a lot of time on field, right, which is field testing, where they would come to your unit, whether you could be operational unit, you could be a tech unit, and they would spend time looking at evidences, strength of controls, and interview people and speak to them. In many ways, that's probably already, the risk has already happened, because the time you take to interview everything and unearth the risk, the emerging risk trends, by then the risk has already hit the customer or the employee or the bank. And hence you have to be agile in how we audit. So this is a new framework we launched around 3 years ago, and we worked on it, on improving it, which is all about using data analytics for audit. That how do we do less field work and more data work. So we reskilled our audit team. We have around 80 people in the audit team in Singapore, Hong Kong, some in India, Taiwan, Indonesia. And all these people have learned to code. They are data engineers now. And it's been an upskilling journey where the audit team, which normally is the most legacy black suit team we would have, has changed dramatically to be coders, to be using data, and to be spending more time in the lab or in the data shop, and spending least time on the field. And they spend just 2 days in the field, and that's why it's such a small force. Normally big banks have many people working in audit. For us, covering 6 countries and some other satellite offices, we only have 80 people, and they're good enough. And it's working in a continuous improvement model. So this is only one example. We're doing many similar examples on credit underwriting, loan, and payments. That can we detect fraud and bad payments? Can we look at money transfer, especially cross-border? And can we know in real time? Because the expectation now is not 2-3 days, so you can't wait to wire money to your brother or sister in America and wait for him or her to wait 3 days to get the money, right? They want the money now. So how in real time can you look at what could be a bad transaction, whether it's economic sanctions or any other field, right? So lots on payment, cross-border wire, a lot on lending, to use data for lending, credit underwriting, and looking at what's risk for the bank. So I want to cite these examples for anybody who's in banking, insurance, and many similar business models. That unless you redo your next 5 years, we're looking at 2025 mostly, unless you redo your next 5 years of banking, look at social trends, financial trends, and economic trends, and technology trends surely, and look back on how the bank would get reinvented or how your business gets reinvented and what would be risk in 2025, and then reinvent your model, looking at artificial intelligence, machine learning, data surely in a big way, cloud, and what is the risk to doing all this and then addressing it in real time. That's what new businesses would do, and those are the businesses will succeed in the new world. So that's how I wanted to kind of appeal to you all today, that you're spending 2 days in this convention, yesterday and today. I hope you are thinking of at least 4 or 5 years out and then tracking back from there on looking at what is the clear and present danger, surely CAPD, but going way out and seeing how your companies, how this fraternity is going to manage risk, where the intrusion and the infringement is coming from all kind of borders which are porous and it's hard to detect, and how do we get ahead of the game and get inspired by many of these tech companies, use the technology of the future and manage the risk adequately. So with that, I think I spoke a bit fast, but I'm on time. Absolutely, am I on time, Ganeshan? We have 6-7 minutes to take any questions, if at all. Otherwise, I'm outside for tea or coffee. Happy to. Yes, sir. Yeah. No, whole banking. Yeah, operation as well. Because a lot of payments, I spoke about the example, that's on operation, not on technology. So if you can get the dump of the payment data, then you can look at what is the balance between risky payments, which were approved, which are non-approved. How can you train the model to be able to look at the risk better, and then what was left out, and then come back and audit them.
Data privacy on this one. How you manage the data privacy on this one, because you are dumping the production data on your system to do audit work.
But these are trusted auditors of the bank.
Okay,
it's not giving the bank environment. This is not audit firm outside. These are our people.
Okay, got
our
it.
team. Yeah.
Sure.
This is not giving out to PwC or this is our. There's no disrespect to the company I just named it. Sorry, they are my favorite auditors. So no, this is our audit team. So I'm saying we are equipping our audit teams to be data engineers and machine learning experts, which is what I was saying. It is the most black suit job in the bank. It will be most conventional, where they would fly into countries, spend 3 weeks in the country looking at reams of paper, normally. But the auditor of the future wears the jeans, like me, and does not spend more than 2 days in the field. But they spend months in the back office or in the lab looking at data. But yeah, data is not leaving. Good question. Anything else on this?
Hi.
Yes, sir.
So, sir, what is your IT infra model? Do you go with complete cloud or being a banking sector?
So we are saying that no excuse for not being on the cloud, whether it's the public cloud or the virtual private cloud, leave that to the legal. So normally other banks would start with validating what can go to the public cloud and have 101 excuses not to make your product cloud ready to say, hey, what can I do? The regulator doesn't allow. So we are saying it doesn't matter. Let's re-platform all the apps in the bank, whether it's customer facing or employee facing, to be on the cloud, whether it's a virtual private cloud or public cloud, leave that to the legal. So we only 15-20% on the public cloud, everything else virtual private cloud, but it gives us enormous ability to use our infrastructure better, right? If you look at the regular rack and stack model on the bare metal hosting, you normally would be 20% utilized, because you design in banks, you design your infrastructure for Christmas, right? Christmas unfortunately happens only once in a year. For the rest 10 months of the year, you only 20% utilize. If you go to VPC, then VPC and AWS mix, then you can do a lot of compute burst in the AWS, leave your data and storage into VPC and still design your app for peaks and troughs and utilize. So we do around 60% utilization on the VPC, right, from 20%, and hence have been able to cut down our infra cost dramatically. So good question. Yeah, absolutely, we're not going to the public cloud without any regard of data privacy. That's something you guys need to crack as well. The perception about public cloud being unsafe. Right? If you look at all the hack news things, none of them are from AWS. Most of them are from on-premise, but I'll leave that to you to decide what is safer. But good question.
So,
sure.
so Digibuying which got very much popular, or rather which you implemented in India and someone else is doing that. Where do you think India is going in terms of the banking revolution, what we need?
I think the fact that we could launch DigiBank in 2016 only in India, after having looked at Singapore, Indonesia, Taiwan, China, and Hong Kong, speaks a lot about India. So if you look at UIDI, if you look at UPI, QR, Bharat, everything else, we are way ahead in the pack. So in terms of, and I'm not talking about enforcement of the IT Act, etc., I'll leave that to you guys, but in terms of infrastructure readiness, we are way ahead. And India is hot and ready for all kind of innovation. And that's why we're so kicked to be here. And that's what I'm saying, that's why we came to Hyderabad, or we came to India, because we have an ecosystem ready. Ecosystem includes UIDI, Aadhaar, UPI, as well, other than other companies. And the talent in the market is ready. So I think India is quite ahead not in the legal and enforcement, that's kind of your topic, but in terms of infrastructure readiness to launch amazing digital products. And we're doing it all. So we're looking at how we can lend to the consumer and SME equally using analytics. Data is available in many other ways, ethically, to use it for the best use. India is very, very ready, way ahead of many other countries. So I don't know if it answers that question. Yeah. I don't know the context of the question, but I'm saying from an infrastructure, fertility of the idea, receptivity of the idea, and the ability to roll out amazing digital products, right reason, India, I think we're ready and far ahead of many other countries.
Right. And whom do you think the competitors you have? Because you have to keep learning what exactly is happening in the market.
I think Alibaba, Alipay, Gojek, WeChat, Paytm, think of everything, right? Tech companies, in my view. They're all tech companies. Uber. Yeah. Absolutely, right? But like I said, since we are a bank, it'll be easier for us to be a tech company. It's a lot more difficult for a tech company to be a bank. With a bank comes a lot of extra baggage of regulation, which is in some way good for banks who are licensed. We are. Yeah? Ganeshan? Yeah, okay. Right from here. Yes, sir?
This is about the talent model that you spoke about, where you said there will be a hackathon, and I'm not sure if it is so seamless where next day morning someone gets an offer. But what are some? Yeah, my question is related to that. What are some considerations as compared to a legacy hiring model where people come from reputed institutes and you can rely on their background? Now, a background check is a post-mortem, but what are some considerations would you have towards risk profiling of an individual? Because these days, that is also a big risk. It's a threat, actually, not even a risk.
No, so I'm not even, this is not for college students, first. This is not for college students, these are professionals. The hackathon is for professionals. I think it's surely a better model than judging people in a half-an-hour interview, right? In a half-an-hour interview, by the 7th minute, you already made up your mind whether you're going to hire that person or not. The interviewee also has made up his mind whether he wants to work for you or not. It has high bias, right? In both ways. Sometimes the institutions on the resume may add to that bias without even testing the person. So I may not even ask a difficult question to you, saying, oh, you came from this ABC institute, so you must be very good. After they join, they don't find you interesting enough, or you don't find them interesting enough. So in my view, our having hired 400 people over the last 1 year in running these 5 hackathons, which is a 200 people, 2-day game show, has worked well because 2-3 things. First, the pair programming thing works very well because what we do is we pair people in a random order. So the guy sitting next to you from some other company, you don't know anything about them. And then you build a product, 4 of you build a product together. And all 4 people are from different companies, right? So it's actually very, very fish, like an aquarium thing, like in a fish bowl. It's difficult. And then put people under pressure. So in an 18-hour play out, if you're able to perform, then life is not more difficult at office after that. So it's worked well for us. I don't know if it answers your question but in my view, conventional model is bias. On the interview bias, the interviewer bias, and the institute bias, and also the experience bias. Because, if I say, oh, you work for Google, must be damn good. How do you know it's set for the culture? He may come back and say, oh, you're a boring bank, damn bad. Right? And they'll leave in 2 weeks. At least through the hackathon, you can observe And they can observe you because we have people all around. So when we do this large hackathon, we have 20, 30 of my team members available at each table to be a coach and a guide, right? Where I'm judging you and you judging us too. It has to work both ways. So it's worked very well for us, around 400 people. In fact, the MC here didn't want to, we hired from October 10th, or which, October 7th? August. So we did a hackathon in August at our office, and she was kind enough to come from Bangalore. She's working very well at the startup. She just got kicked by the idea of being she's a young engineer and a great performer, part of my team. And she came and hacked her way in a full day hackathon and won the job and joined the next month and has been there, and today is MC. So, so in my view, it's just a bias thing. I think we want to unbias both ways, where you need to love what you do. It's all about passion. This race is extremely exhausting. In my view, this race of digital innovation is extremely exhausting. So only passion and real energy will take you through. Otherwise, this agility and velocity. So we're doing weekly builds and monthly releases. Kills you if there's no energy and passion behind it. So in the hackathon, you're also looking at that, which in an interview you can't. Interview, you talk about the weather and the traffic, and then go to the questions, right? The person is already suited, booted, and ready. In an 18-hour hackathon, no bathroom, no shower, hungry, ask her, no sleep, then you judge. Both ways. We also don't sleep through the hackathon. Works very well. Should come to one of them if you want to.
So one question from here.
Hello, sir.
Yes, please. Last question, yeah?
Yeah. In terms of peer-to-peer lending, at what stage DBS is, like considering another 5-6 years, 30% of the banking is going to be more like peer-to-peer, where technology-driven
We are
banking.
not doing anything in P2P lending.
Because last year the RBI has come out with a clear regulation on IT framework and all.
Yeah, maybe that's a game for non-banks.
Okay.
We're not doing anything in P2P lending. I'm just saying that we are building models to lend better, right? Which means that at a lower rate and lower loss. Banks make money through lending. So if I lend too much and can't recover, then you're NPA. If you don't lend, then you're not a bank enough and profitable. So we're working a lot on models and analytics on who to lend and how much, but we're not looking at P2P. Maybe someday.
Okay, so Mohit is a coffee person, so he'll be out.
I'll be there till, yeah, thank you.
So you can ask any of the questions.
Did I overshoot my time or is it okay?
Yeah, no, it's
I'm okay? Thank you.
fine. So,
Thank you very much. Thank you.